Alright guys, welcome to this quick video. Alright, this video is actually meant for my inner cycle, you understand, those under the mentorship, but I just want to share it here on both the public group so that everybody can understand and also benefit from it. Alright, now I want to teach you guys something about what directional bias. When you say directional bias, that is the overall trend. That is, where is the market heading to? Where is the market going? That is what we call what? Directional bias. So I'll be deleting all this out so that you guys can get a clear picture of what I'm talking about. Okay, 4 hour time frame, right? This is gold. You guys know I rarely trade currency pairs. Okay, now when you look at this, see, all these moves here is none of your business. This doesn't mean that they are not important. They are important, but as of now, they are not your concern. What should be your concern is what? The present move the market is giving. Okay, that is what is supposed to be your concern. Now when you look at this, what are you seeing here? Look, ask yourself, where is this market heading to? The market is what? Bullish. When they say bullish, when market is creating series of higher highs and higher lows, higher highs and higher lows, okay, that is when you can say market is bullish. Or you bring your trend line and drag it, and then you see if the trend line is facing up, just know it's bullish. If the trend line is facing down, know the market is going downwards. Okay, how do you know an uptrend market again? This is what? A higher high, right? Higher low, a higher high, higher low, a higher high, a higher low, a higher high, which means what? This is an uptrend market. Now when you draw your trend line, look at this. This is more like back testing. So I want to show you guys my strategy, supply and demand. Okay, it works very well on gold, and that is why I'm always able to catch all these entries. So if you notice, I only trade breaker blocks and supply and demand, which is TSMC. Okay, now when you look at this trade, your direction is what? Bullish. Then go down to 1 hour time frame. Okay, if you like, you can analyze from 4 hours. All right, I just want to show you guys something. Now when you look at this trade from the 1 hour time frame, you are going to see that there is a change of character here. Okay, I'll be labeling everything so that you guys will understand what you are supposed to know what is change of character, right? Or market structure shift. Now when you see this change of character, if you go down to maybe 15 minutes, you will see that this place is what? A potential what? Order block, because market has what? Created a market structure shift or a change of character and engineered what? Liquidity. This is liquidity. Liquidity, as you all know, simply means money. Simply means money. Liquidity is what drives the market. Okay, now you see a sweep of liquidity, and immediately market swept the liquidity. It started buying. Okay, it started buying. This is more like back testing. All right, try to use this weekend to back test. Okay, now if you are following my trades, you will notice that most of these moves I cut them. All right, now you can see that once market did that, market now broke this high, creating what? A break of structure to the upside. This now confirms that what? Market has fully what? Changed direction to the upside. Okay, now when you look at this, what next? If you trade supply and demand after a break of structure, where is supposed to be your order block? The last candle that printed before the impulsive what? Move, which is this candle. Why? I will explain. Okay, now look at this. This was the last candle that I printed, okay, which make this other block to be what, very very what, valid, because look, there is liquidity resting here for market to what, come and take out, okay, and buy. And then here we also have what, our fair value gap. You guys supposed to know the meaning of fair value gap now. FVG, imbalance. When market create a huge move with impulsive candles, they are all what, imbalance or what, fair value gap. Now when you trade my strategy, which is supply and demand, you are supposed to know that markets will come and tap what, here. Now once market clears this liquidity, market is supposed to tap, dish out a change of character, and then what, buy, okay. But now, do you know why this other block failed? I will explain. Because what, there is a breaker what, block here. Market was supposed to sell from here, all right. So market used what, the breaker block to what, to buy, okay, make invalidating our what, supply and demand, and then now turn to what, other block, breaker block, okay. Now you guys know I caught this trade. If you check our community, you will see I caught this trade, right? Breaker block. Now once market now moved, what again are you seeing? You are now seeing what, a break of structure, okay, a break of structure. I will explain why this place is a break of structure. Now when you look at this, we have a higher high, right? We have a higher high, sorry, we have a higher high, okay, a higher low, and then this is a fake out. So you will not be marking this zone. This is not valid. This is a fake out, okay. When you want to confirm a valid break of structure, the candle is supposed to move and close above the previous high, okay. So it's moved, right? This is what, full what, break of structure, all right. Now when we had you guys know now, last week I was just hitting TP, and then we had some losses as well. So I'm just showing you guys how I caught all those entries, all right. Now when you see after the break of structure, if you trade supply and demand, the next thing you are supposed to look out for what is your order block. And where is your order block? The last candle that printed before the impulse, okay, last candle that printed before the impulse. It doesn't have to be a bearish candle, all right. When you are marking a demand zone, it must not be bearish candle. Just mark the last candle that printed before the impulsive move. Now you can see we have what, a liquidity what, sweep present, all right, sweep of liquidity, and then market did what, bought immediately, okay. And then we had what, another what, break of structure, which was the last buy trade that I caught, all right, on Friday. Now look at, we now have what, the last break of structure, okay. Now where is the order block you are going to mark? Here is your order block. Mark this candle, the last candle that printed before the impulse. I didn't mark this one because the candle is too small, so I want it to be like, it will have space for your stop loss to breathe, okay. Now I marked this. So I didn't share this trade with you guys, all right, but I can't remember if I shared this trade with you guys, but I know I took this trade and I took a loss here, all right. Now marked here. So always know this, the fact that you are trading a strategy doesn't mean you will not hit stop losses, okay. You are going to hit stop loss definitely, and I will explain why I took a loss on this trade, all right guys. Now when you look at this, what do you think is missing here that made me take a loss or make this other block not to be valid? Liquidity what, grab. There was no liquidity for market to come and tap in, all right. All this other setup you are seeing, liquidities are present, liquidity present. Okay, liquidity present, right? So once, always know that when you are taking a trade, your order block, if there is no liquidity present, then know that you yourself, you are going to be the liquidity. Market will come and sweep you before it will start buying, and that is exactly what happened here. Okay, that is exactly what happened here, because there is no liquidity for market to come and sweep. That was why market swept me first before what? Buying. All right, to the upside. But I still caught this buy. All right, the last trade I shared, I used what? Breaker block entry, because once market did this huge spike, what I now did, I now went down to the 15 minutes time frame. Okay, sorry, 15-minute time frame. So it was from the 15-minute time frame that I now use what? A breaker block entry to catch the last buy I posted with you guys. If you check, you will see. Okay, it was breaker block I now used to what? To catch the last buy. Okay, now one good thing with directional buyers, I want to give you guys a secret. Okay, when you've seen your directional buyers, please, if it's bullish, always just keep buying, don't sell. Buy, wait for pullback, for correction, you buy again. Now looking at this, you'll see that from your directional buyers, this is the high, the swing high that you expect market to what? Come and take out. When you get your directional buyers and you've marked out your swing high, okay, always keep buying until you get to that swing high. Don't sell. Okay, do not sell. Keep buying. Even if you catch 1:2, leave it, allow the market to do corrections, buy again until market what? Come and clear that high. But if market now fail to clear that high, now changes direction, that is when you will now start selling. Okay, so this was simply what I just did last week. So I just felt like doing some back testing so that you guys will see and understand why and reasons why I always take all my setups. Okay,